Hey, happy day to you. I wanted to talk to you about understanding the 2026 market. If you want to buy a home in 2026, these are the top things you need to know. Number one, assess your financial readiness. Make sure you review your income, your savings, your debt. Make sure you can handle the mortgage payment. Usually, we look for 2 years of work history, 2 years of steady income, and if you're a recent grad, that qualifies to be a home buyer. The market for 2026, they're looking at the interest rates to hover around 6% range. Now that could vary. None of us have a crystal ball, but that's one of the things that they're talking about. Check and improve your credit score. You can do your annual credit report, see what it is, see what's on there that you need to take off, and handle that. There are some companies that's saying no credit score is required now, but they're still going to look at your credit report to see what's on there. So it may not be a minimum with this company or that company, but other companies may still have a minimum requirement that you have to have on your credit report. Calculate your budget. What can you afford to pay every month? Now, when you look at your budget, look at your HOA fees, your insurance, your taxes. Think about your utility costs and the maintenance on your home. Does it have a pool or what? You have to count all that and put that in consideration. As you know, no down payment does not mean you don't need any money. You still need money for closing costs. You still need money for inspections. You still need money to move. So you have to come to the table with some money saved up someplace. So with that being said, get your mortgage pre-approval. Getting a pre-approval from the lender clarifies your budget, but also signals seriousness to the sellers in this competitive market. Explore first-time homebuyer program. They're still out there, as a lot of them exist. So we can look at HAR here in Texas and find out there's about 43 first-time or homebuyers program. Shop around. Shop multiple lenders for the best rate. All lenders are not created the same. The analogy that I like to use is like going to a restaurant. You can't get lobster at all the restaurants. All restaurants don't serve the same type of food, but they all serve food. Understand your debt to income requirements. Even though your credit score might be good, you might be in debt up the yin yang, and lenders will look at that. So try to keep your credit cards low, the balance on your credit card low. Pay off what you can. And if you can keep that credit card below 10% usage, you're good to go. Choose the right real estate agent for your transaction. All realtors are not the same. Vet them, look at their social media, see if there's somebody you vibe with, because you're going to be with this person for at least 30 to 45 days. Got to be somebody that can communicate with you, that understands your wants and your needs. It's very important. Prioritize your must-haves with your wants. If you must have a 2-car garage, communicate that to your realtor. If it would be nice to have a 3-car garage, communicate that to your realtor. If you have to have a pool, sorry, this is shaking. If you have to have a pool, communicate that. Pool is nice to have, but it may not be a must-have. Consider your resale. Is it going to be in an area you're going to be able to sell it? Is it in a good school district? Is it in a war zone? Is it in an area that's up and coming, or is it already established? So think about how long you think you might be there and the resale value of it. When you're looking at your budget, you also have to consider maintenance. The roof is not going to last forever. Things break, even in new homes. After that 2-year warranty is over, there's no guarantee on whatever else is going to happen. So always have a little cushion set aside for things that's going to break. The water heater, the air conditioner, things like that that's going to break. And you're going to need money someplace so that you can fix them. Make sure you use a licensed, qualified inspector while you're in your inspection period. They can uncover things that you can't see with the naked eye, and at least you'll go in there knowing what you have and what you don't have. Some areas may appreciate more than others, depending on what's coming in the area. So look for that. Look and see what's coming in the area in the next 4 to 5 to 10 years. It could make your property appreciate, or it could make it depreciate. Lock in or buy down your interest rate. With expected rate shifts in 2026, consider locking in your rate early or buying down with points if appropriate. You can buy down points so you don't have to have a 6% interest rate. You can get a 5% interest rate, but it's going to cost you up front. Everything costs. Be ready to act quickly. If that dream house comes up on the market and you're not ready, it could go to somebody else. So it's good to have your pre-approval and everything ready when that property hits the market. Avoid overstretching your budget. This is number 20. Leave room for life changes, future investments, and unexpected expenses. You might get pregnant. You might have a baby. You might lose an income. Can you still afford that house? Make sure you're not house poor. So if you like this video and you want me to do another one, please like, share, and subscribe. And I thank you for watching. My contact information is Vanda Crossley with eXp Realty and Loan Factory at 773-678-1085. Have a blessed day.